Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Discord Trader Lab? Thanks, Plato. How we doing in Trader Lab? Well, everybody, good morning. Welcome to the Traders Lab. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis to overlay structured trades on in the intraday developing time frame. The idea of this stream is to help traders understand the business of trading, how the market works, why it does what it does, and how at times to get in alignment with it using structured trade plans. The idea of the business of trading is not a video game. It's really much more a strategic endeavor using statistics and probabilities to, shall we say, tilt the probabilities of sustainability and profitability towards you. Even though we all have losing trades, that's only overhead and cost of production if you have an edge. And the idea of chasing the market and all the things that most retail traders do, that will not most likely create consistency and survivability, let alone sustainability. And if you're interested in the business trading, you're all invited to Trader Lab. There's no cost for that. There's a link in the bottom of YouTube if you're interested in checking it out. And there's, again, no cost. Let's take care of business. We have a couple quick things to talk about, and then let's talk about today's market. Today is based on China news, and the news is that the 100% threatened tariffs that caused the Acapulco cliff dive in the market several weeks ago. Now there's, of course, the opposite news that the President Trump's visit to China may result in some resolution of that tariff threat. So we have news inputs, and news does change or alter the lay of the land. So we're going to try to make some sense out of that, and why developing traders should have a plan specifically for news inputs. News inputs disrupt the perception of valuation, and then the market must auction that or try to figure out if it's gone too far or if there's more to come. And that specifically is a plan isolated for the condition. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's go take a look at what else we got here. By the way, I'm in Mexico here at the moment, so I'm on a laptop, so it's a little more challenging to move things around. There you go. Be sure to check out Bruce's pilot program. It's about extracting an edge, putting together whatever tools you might need to create some form of stability in your process and statistical probability. If you don't know how to do that, you might go a long way, at least getting a understanding of how to approach this, and it may help you on your journey. The other thing is, right now, if you're a Bookmap subscriber, take screenshots of your trades, annotate them, and submit them to using the hashtag FreeBlueJacket. Just drop them on Instagram, X, or LinkedIn, and you can qualify to win 3 months of Global Plus. That's about a $600 value plus data for 3 months for just dropping them in there and being selected. So don't miss out on that. That's for the month of October. Now, let's try to get back here. And again, it can be challenging. Now, some of the trades you're going to see here are based on what you see here. These are structured trades. This is not a trading course. I'm not a vendor. I'm just somebody like you. Just been doing it longer. So I've had more opportunity to walk in your shoes, and everybody who's in Trader Lab's done the same thing as you. We all have winning trades. So we all always think we're on the right track, and we just have to make it better. However, randomness is an element, and randomness can create a distraction and a perception that we just have to make it better, make our plan better, or better yet, just click the mouse better without a plan, because we are going to have winners. The issue, of course, is can we generate an edge, which means over time, even though we are going to have the losers and we are going to play the gamblers. 1 second, please. That over time, if we have an edge, that's going to result potentially in sustainability. This is the trading process as I view it. 1 moment, please. I'm getting a little distracted here. 1 moment, guys. This is the trading process hierarchy. In other words, how does the market work? Why does it do what it does? Also, the tool to see how the market functions is really the volume profile. Volume profile is really a representation of just pricing, and all the market is a pricing mechanism. What's too high, what's too low, what's fair, and it's going to rotate and try to determine this by activity of those participants. So the volume profile is a tool we can use to try to see that. Time frame is really a function of really what is the rotation that you trade. Some traders, of course, are position traders, and this is really more about day trading, though the process I share here applies to all time frames. Doesn't matter. So position traders, it's all the same. But it's just a matter of isolating the rotation you operate in. But most of us now are day traders because of the technology allows that. But if you learn the process here, you can just apply it across any asset class. It can be stocks, options, anything. ETFs, they all function the same way. So whether it's a basket of stocks like the S&P 500 or an ETF or an individual stock, the mechanics are the same. Shopping, what's too high, what's too low. Context is the condition of the market. Now we have China news today, so we have a gap that's news-based. Now also on Friday, this last week, we gapped out of a consolidation and made new all-time highs. So now we have a further gap on the news, over a 50-point gap in the ES. That is the galloping market. Now, the thing about a galloping market is they can't keep running. I mean, the thing is, we can't say where it will stop. So our job as traders is not to predict anything, but we need to understand the condition of the market and what that might lead to. Now, the word might is what's part of trading. Maybe it'll do this, maybe it'll do that, but we're not in the prediction business. Remember, we're in the alignment business. So that's the context, and that's a news input. And then Bookmap's an order flow tool, of course, which helps us get in alignment with the market. And like everything, it's a tool, and we have to learn how to apply it. Now, guys, if you have questions, please post them. If you're in YouTube, thanks for visiting Trader Lab. I'll do my best. Trader Lab also. 1 moment. Okay, RTH open. Let's go take a look at this. Now, coming in today, I'm going to go to our context grid sheet, which will help us. As developing traders, we need to have some structure. The idea of a trade plan is already knowing what you're going to do before it happens, not what the market will do, what you will do. So it is very much a if this, then that process or conditional process. So let's look at the if this, then that, and I'm going to refer to our context grid sheet. So we are opening in a gap, okay, and we're out of previous day's range. What does it mean? It means the market's out of balance. Now, typically, what the market tends to do is it tends to rotate and look for too high, too low. When you get the gap, we're actually potentially rejecting the the previous auction or valuation of pricing. So when you get the gap, and this is news-based, now we have a new input. The perception of value from Friday, which was already a breakout and a new all-time high, but we tested the top of the all-time high. So it was like a gap, test, go, longs, which was what Friday's trade was primarily. And then today, news-based, a larger gap. So let's think about it. The market's been running. Now, when the market runs, think of it like a marathon runner. At some point, the market's going to have to catch its breath and rotate and equalize. So when we have a gap like this, let's look again, what does it mean? The market's out of balance. So then what? Is the market responsive? Now, responsive means two-sided trade. In other words, do we get some profit taking? Do we get rotational? Well, if it's out of balance, then what we have to be looking for is consolidation, rotation, and potentially come down, get into the gap. That's one part of it. Responsive selling, which is profit taking. In other words, you're long, you got the news, you say, I'm out of here, and you respond. So that gives you the selling. The other part is, if we get into two-sided trade, which side takes the ball? So at this point, early on here, it is responsive selling. So the first trades for me, and this is not a recommendation, was responsive selling. But now there's some other elements to this. Statistics. Now remember, a news plan is not a walk in the park plan. It is specific to the condition of the market. If you're in Trader Lab, you're going to begin to learn about the market is not a one-size-fits-all. It's really contextual. So if we have a news input, we can anticipate profit taking because of the news. We can anticipate, is the market going to balance out up here? And then we're going to get rotational and dig into the gap somewhat. Are we going to find our buyers down somewhere and then take out the shorts, which we might have sellers in here, which become weak, the weak side? Now, I'm posing the questions because we won't know the answers until the participants tell us. So, opening higher outside of range, there's a 97% potential of taking either the ETH high or low. 79% to take the ETH high. Taking out the first hour's high or low, 98%, and we could do both. One never knows. Taking out the first hour's high is about a 62% probability, so we are leaning to the north side. And everything else is pretty much out the window, unless we start responding and come down. So first things first, let's go look at the opening trades. Now, I want to caution everybody, if you don't have a plan, your job is to sit and wait for structure to develop. I always say this, there's no hurry. If you're in a hurry, then your chemicals are flowing in your brain and it's FOMO. You need to recognize your emotional stimulus and the things you respond to. We all respond to FOMO. We're all anticipating, waiting, so we can get on the big gap and, oh, it's going to go to the moon. And of course it might, but that's not trading. And if you're in there chasing the market and getting stopped out, then you're out of control, or you just don't have a plan. I'm going to say if you don't have a plan in your trade, you're still out of control because it's FOMO. The thing about a plan, just to make it clear for you, is you need to know the specific conditions of the market. You need to recognize it. You need to have a plan for it. If you don't have a plan, you need to recognize that you have to wait until it fits one of your plans. And if it never fits your plan, your job is not to trade, because there's going to be thousands of trades in a career. And you can certainly sabotage yourself by just responding to FOMO. And those of you who have done that, we've all done it, you know the results. Probably not a good thing. Okay? So let's take a look. Now, for me, my first trades were shorts. And which doesn't make it good or bad. It just says, I'm just going to show you. And I'm going to try to give you an understanding of it. And now what I do is not necessarily anything more, I'm just a trader. I just put a trade on and I just, whatever it does, it does. And I'm pretty detached from it. I do know, though, that the market can rotate that. Now, let's think about that FOMO. If the market gaps, and this is our RTH open, the overnight volume point of control is here. This is the retail price, and the probability of getting here when we open higher outside of range is about 81%. And you have to bet these for yourself. So I know if I open here, I go up, I have an 82% probability to come there. To get to the ETH mid is about a 68% probability to get here. So my thinking on this is, well, high probabilities here and responsive selling. And I posted this in Trader Lab this morning. So we're looking for profit taking. Okay? So, and that doesn't mean anything, all right? Okay, let's watch. So, market opens, and we're anticipating what? FOMO buying, and they may, they may win the lottery ticket. No judgment. It's just retail trader behavior. How do you feel when you get a 50-point gap or so? Do you want to buy it? It's going to run away. If you're not in it from last week because you took profit taken and flattened out ahead of the weekend, what do you think now? Oh, I'm missing it. FOMO. Okay. Well, there's also longs in the market. So we're going to get our buyers potentially, and nobody knows. This is part of the thrill of randomness. My thing, and this is posted in Trader Lab this morning, and this is a very high risk scenario because it's news based. So anyway, I'm looking for the selling. Now, when I put these trades on, I know it's counter trend from the higher time frame. So I'm prepared, like I am in any trade I put on, to take stops. So let's read the language. This yellow line is called developing volume point of control. All it is this is the shopping experience. If you and I always say trading is shopping. So if you know how to shop, you know how to trade. Now the difference in shopping is prices don't move much. I mean, they put it on sale, you throw more in the cart, the price is too high, you have price resistance, you may not buy, you may buy one, you may buy none. And if the sellers want to create volume or do business with the buyers, they have to lower that price down to a price point where buyers will engage. And that's like a retail price in your store. High volume runs through there. So if we get to either extreme, too high, cuts off the buying, too low, and the sellers won't keep it there, that will cut off the buying. I should say cut off the selling, so the buyers have to pay up for it. That's what creates our rotation. So in the store, we're not getting really the rotation because it's long time frame, high time frame. In our day trading time frame, it's as short as you want to make it, so that auction or shopping experience is taking place in all of these. So let's look. Retail price. Market opens, and this starts at zero. This yellow line is the retail price. If there's more volume up here, which means buyers and sellers are interacting, this is going to move. So what does it say? Too low? What about up here? Maybe too high, too low, break high, support, watch. Now this is just the way to narrate. I'm actually following the shopping. This is called a variable high volume node. And what it is volume. That's all it is, volume. So up here, hold on one second. I got to turn something off over here from Investor RT. It's exporting current levels. I got to just turn them off. So hold on a second, guys. And then I'll put them back on if we get into real time. One moment. Okay, sorry about that. Okay, so this is the retail price. This is the retail price going to the moon, Alice, right? I mean, that's what it looks like. Here's where it changes. So let's look at it this way. Liquidity, fair price, too low, follow the story. Fair price, going to the moon. Fair price, watch the behavior, same as this, breakdown. Now, let's look at some different behavior. Retail price comes here. So I'm going to now mark this. I'm going to call it a variable high volume node. What I'm trying to gauge is, and this is very aggressive, so certainly not recommended ever. Nothing is recommended. You have to vet it. So let's watch what it says. So I have too low, too low, too high, maybe too high, retail, so resistance, support, and I have something else, opening swing low. So opening swing high, and the buyers are here. What's under these guys? Sell stops. So let's see what happens here. I pick, I call this a stop pick. Thanks for playing. You get a coupon to the buffet. Now I'm looking for rotation. So is this too high? Is this too high? Let's watch. Resistance. Now I have buyers here on the opening swing. I have resistance here, resistance here. Let's look. Watch. I took a short here, right here. You can see the short working, right? So I took a short here. Now this is very aggressive. And why am I taking a short here? Let's look at the story. Opening swing low, I call that a stop pick. New retail price resistance. Break low, stop pick, get my buyers. Resistance is here. Why? I'm not paying that. Break low, resistance, break under here. This sets up my short. Now I took it here. You also could take it at a second location. Here. Okay. So for me, I got risk. Don't forget, high probability to get to the ETH mid. This is where statistics come in, 68% probability, and you have to vet these for yourself. Past performance, not indicative of future results. So that's my scale. And then I'm looking for, statistically, I'm looking for this, but I also know, who knows, right? So I just trade a plan. I don't know anything. I just go with. Once I come above here, then I know the shorts, including me, if I come out here, now there's going to be buy stops. So taken out, okay? So I get taken out and I get my ETH high. Remember, I had a high probability ETH high low, and I primarily trade statistics. And once I got down here, I was pretty comfortable that the trade had done, whatever, and maybe we can rotate lower. It doesn't matter to me. It's just a trade. So that trade's out, and now I'm coming back up. So I'm seeing now what's the condition of the market? Two-sided trade. So let's go back to our grid sheet. What does it mean? It means that we are accepting the new valuation. In other words, we are auctioning this thing, and it is suggesting, since we're in two-sided trade, that sets up something called mean reversion. Reversion trading is outside in, and it's tricky because it's counter trend in this condition, just to add to the thrill. Now let's look at another short. So here's what makes this two-sided trade. Up, down, up, down. Now here, this might have been it, and off we go. I'm still thinking, though, I'm still looking for what's called reversion. Now, reversion trading is outside in trading. So, but I have to be very careful because this thing could take off and, because we have bullish news. So let's take a look at the structure here. And I posted this one in TraderLab, and it doesn't matter. I post something in TraderLab. They're not trade recommendations. Now this is order flow. Resting liquidity. It's not the same as this stuff, which is more algorithmic. This is sitting in the book. Break high. Let's look at it. Now, this is an order flow trigger. So this becomes support. Here, let me do this here for you. So I have this right here. So here I have a sweep. I'm looking for an upside rotation. I have support. I break below it, and I'm now back in the, we got our ETH high, which is a target. I have high volume sitting there, and think of this like your store down the street. It's very simple. This is shopping. And depending on the quote time frame you trade, and I don't use the clock because the time is what it takes. The sellers are here. There's the icebergs. And this is now where the sellers were. But if you can stay above it, then we can move up. We break below. This is a order flow trigger, and sellers are here. And the sellers, more volume. You could see it here. Here's something else you can look at. This is Delta. Market's going up, going to the moon. Where's my buyers? I don't see them. Do you? No. We're about here. About even. What about here? More sellers. More sellers. What about these guys? Oh, where are we going? Nowhere. More sellers, more sellers. I'm seeing high price, more selling Delta, suggesting the sellers are now taking control and they're absorbing the buyers. Break low, sell trigger. This is a short. Mine was like 89.25. Luck of the draw, who knows? Scale here. So this is called mean reversion. And what it is this, it's outside it. Now remember, the problem with all this is that this is counter trend. So when I say it's a problem, you already have to know your trades in the condition. So if it's two-sided trade, now there's a couple of elements here. One is it's counter trend. Two, the market is rotational up here, and the condition of the market, now we're in an uptrend, is rotational. Rotational means it's accepting this higher price, but it's still two-sided rotation. If we don't fall out the bottom and have more responsive selling, then we can stay here, slosh back and forth, and potentially squeeze out the top, because the two sides are participating, and one side's going to push. So if we have sellers in the morning or early, as the early trades, it's possible that the shorts then that are coming in here, if they don't get additional love, as we say, then they will become buyers and they can get squeezed out. And we don't know. So resistance is here. I'm going to extend this a little bit so we can keep an eye on it. Okay, so let's watch resistance. See how this might work? This is order flows trigger. So going to the moon, not so much. Short, mean reversion, and then you're looking to, and now the way I worked this one was, so I had the first one, this is the second short I took, and this one I was looking to see if we could get below here. But if this is an outside edge, this is the outside edge coming back the other way. This is reversion trading. So it's outside to there. That's the mean or the fair price. Then out here, because you could just be doing this. So this was what I call it was really a reversion trade. And then I had a run around here just in case, So the outside edge was right here. So I just took it down primarily to here. So it's outside. So it's from there to there. That's the trade. And then if it falls out, it gets under here. The buyers were here. How do I know? Look at that. See the buyers? So I know the sellers here, these guys, got absorbed. So I know I got buyers here. So if I'm trading the reversion, then I'm really going back here, because that's where the low volume is, there. And then we either take these guys out or we come back across the range. So my trade's there to there and then out. Back here, this is resistance. So I'm still in two-sided. So this is, now right here, up to the individual, for me, I'm protecting here at 90. So if it gets above this, then the runner, and I'm very light in this because it's counter trend, and that runner goes. So that runner gets taken out. Okay. So I'm in two-sided trade. Now I'm going to switch on these levels again. Now, for me, and I'm not saying anything, I don't have any judgment on anything. I just trade a plan, and I'm not saying it's the best or good or anything. It's just a plan. Now, because we're in two-sided trade and we're accepting this area, I know one side or the other will take control. And my thesis is that the market not only is out of balance, but it needs to rebalance. So that means that the potential at some point for us to take out the longs exists. Now, it doesn't have to do it today or ever, but it will. By that, I'm saying is once the market gets too lopsided, the market will rotate, and the weak longs have the potential to get taken out. In fact, let me try to show you something here. This is the RTH higher time frame, and here's kind of what the deal is, as we say. Let me try to get this. This is investor RT. Hold on. There it is. A little hard on a laptop to do this. Okay. So this was the 100% tariff on China news a couple Fridays ago. Hit a support level, consolidated. This was the previous all-time high, a consolidation. On Friday, we broke out of this consolidation. This was the RTH all-time high, and the low of Friday was the ETH all-time high. And that set up longs, longs, longs with responsive selling or profit taking at the end of the day Friday. And there was an interesting discussion in Trader Lab over the weekend about continuation trades, which may or may not be qualified, subject to contextual components versus mechanical components. And that's worth reading if you guys in Trader Lab haven't had a chance to look at that. It was an interesting conversation. So this is our breakout, and this is Friday, and now we have today's gap. So the idea is the following. Before this gap for new all-time highs, this was the high. So what you have is longs have stops under here. They have the gap. They have stops under the gap. And now we have this with all this thin air inside. So the longs have been having the champagne has been on ice. It's been wild. They're buying houses out in the Hamptons now. They're having a great time. This is going to need to rebalance. So at some point, and whether it's today, tomorrow, who knows, that's not our job, this is going to potentially get revisited and filled. So make a note on your charts about these gaps. These are not auctioned areas. An auction is two-sided, up, down, around. So, like this. Well, when you get the running market, all these have the potential of getting filled in. So this gap, and even down here. So don't forget these. This is the retail price from this last consolidation. This is where the highest volume was before we broke out. So the potential exists to fill the gap, check this one, and then check this one. So don't forget that. Just put it on make a note, because that's how the market tends to work. It does not go one way. Now, the thing with the market is it can go as far as it needs to go. Hold on. Just 1 second, guys. Just a little problem. Yeah, I created a little problem for myself here on my laptop. Just see. 1 second. Well, cannot address this at the moment. Okay, sorry about this. This is what's hard when you work on a laptop. Things can happen. Okay, so we're above this. So the market now is extending to the upside. I personally don't have a trade here. I have to wait. I don't chase the market. And as far as getting long goes, I don't have it long. So The only long I have that might set up is this IB trade. And this now is, yeah, I don't have anything here. I don't have a structured trade. So I don't have anything that I can do with this. One moment. I'm going to try to fix something here, guys. Give me a moment, please. Yeah, we're definitely having some trouble over here. I apologize for this. Part of being on a laptop is be problematic. I'm kind of stuck. I can't pull any other charts over here, so I can't show you anything else at the moment. So let's watch behavior. Let me just see something here. No, so I don't have anything here to do at the moment. The only thing I had was responsive selling, so I don't have anything else. We have the IB here, and we might have an extension right here for a continuation long. I think we have to just be patient here. I don't have anything else here at the moment. We can extend, but there's no reference point here. We do have a structured trade in TraderLab called the IB continuation trade. We just have to be very, very cautious. The IB is the first hour's high, which is here. It sets at 9:30. And if we take it out, see its resistance pullback, it can be a continuation long. I'm not giving trade recommendations here. I think any longs up here don't have a lot of structure. This could be a long here, but whether or not somebody takes it, we're over the ETH high. And again, we have no reference point up here. You guys have questions while we're at it? I find for myself, I am not a mechanical trader. And I know that even though we've taken out the first hour's high, which suggests continuation, I'm a very cautious trader in this environment. Uh, I don't feel compelled. I'm just talking about me. I don't feel compelled to trade if it's not to my advantage. So I'm very patient. It's almost like thinking about, well, if I have X amount of dollars to put at risk, which trades am I going to put at risk? So I don't really have anything here for me. Even though this is a structured trade in the Trader Lab, this is fine. My risk on this trade is pretty much here, this high volume node. So if I get long in here, right here, as a matter of fact, my risk has to be out here, and maybe I'll come up here. This is a nice even number, nice strike price. This might be a target. So I'm only giving you what might happen. I don't know what will happen. And if I don't get good trade location, I just don't trade because I have all day. So I'm not compelled. And I know most of us are compelled, don't want to miss it. That's all FOMO. I'm a little more strategic about this. I've become very familiar with FOMO over the years, and I am more detached. So I'm not a mechanical trader. But when you're learning to trade, you really need to think or anticipate the locations of a trade, but also understand if the trade based on your plan, is it qualified or not? So what would trigger a short? Well, at the moment, I don't have any trade. So I would not say, I don't suggest, and I never do recommend trades to anybody sell this. I suggest developing traders don't trade it until it comes into a behavior that is vetted and you recognize. In other words, the context. This is a context, I think, so far, the selling has been taken care of, and now the buyers are back in control. The issue, of course, for getting long is where do you get long? Because while this is a structured trade right here for long, it also carries a substantial amount of risk because we can still rotate back inside. Of course, it can always do that, but I'm not one who likes to buy high. I'm a little bit more of I want to buy the rotation outside to come back. So this, for me, is a much higher risk trade. And again, I'm not one to chase risk. I'm really somebody who's much more patient. And here's the other part about this, and this is probably not what developing traders are interested in because they're interested in pushing the button and the rest of it. If I don't have a trade that gives me an advantage, I don't take a trade. I just wait for the trade that does. And if I have 2 trades for the day or 12 trades for the day, I only trade when there's an edge. Now, that doesn't mean mechanical trader. So developing traders, and we have a trade in Trader Lab called the IB continuation trade. And it's a long, but we are not in a trending configuration. We're in uptrend. So this suggests, here's the following possibilities. And you're going to love this. It can go there because that would be the next target, or we're going to come back around and rotate. So I know right now this is potential support, and this might be support here. So it's either going to go there, or then we have this, and then possibly back here. So, and if it comes outside, I'd still be considering longs, but personally getting long up in here, I perceive it as outsized risk. So and that's not a recommendation. I'm talking about me. I'm not into action, which I know a lot of us are because we experience this like a video game. I'm into rotations and range. So it's just pretty much wait for range. So if I get long here, I may go there, but I can just as well. Here's why. There were buy stops here, right? So I get down, I squeeze across the range, and if I can't get buyers above here to go here, then I'm going to get the sell stops in this leg, then can become the rotation. So the shorts were in here, right? Buy stops up here. So they get squeezed, and then we get the selling. So now the question becomes, can we extend up? So there's 2 possibilities here. The IB continuation long, and that's all it is, possibilities, or the IBF reversion, and this would come across the range down to here. The trend is up, so the IB continuation is the logical trade, but we are in 2-sided trade. So subject to your plan, this is either a long here to there or come across the range. And I can't tell you which one. I know the higher time frame is up. I know we got our early responders. I know we're accepting this higher price at the moment. And since we already had our responders and the buyers are back in control, this has the probabilities or the lean is this way. You have to know in your plan, would you get long here? And maybe, and your stop's got to be under this out here for the extension. Or you not take any trade here and you wait. That's up to you. So I'm giving you the alternatives. And of course, I don't call trades because any trade can take a stop. So it's not about right, wrong. There is no right, wrong. What there is, do you have an edge getting long here? Because I need buyers above here, right? So let's see what it does. Overbought on a RSI really is not material, and it's the context of the market. Market can, as the old saying goes, market can be overbought a lot longer than we can be solvent. So overbought is not material. What's material in the market is not a lagging math-based, price-based indicator. It's what's happening under the hood. And the buyers are active up here. Now, the thing about it is the question, and it's only a question, I can't give you the answer, is what was this buying? Is this new buying or just stops? These are the buy stops, the guys who are short with their stops here. And we're in a two-sided market. That's why the behavior here is so coin-tossy to me, because I know we can go higher, but if we're in a two-sided trade, the market is accepting this. And if we can't get additional buying here, we will rotate. That's where the dilemma comes in for me, and the need to be patient and not worry about it. In other words, I don't have to do anything. So I find that, do I have an edge buying here? Well, I don't. So and all I can tell you is what it can do. When I say, yeah, it can go up or down, the reality of this is what we don't know is, are we going to get the buying above this swing? There's the stops, and where's my buyers? So that's the question. And that part I can't answer for you because I have to wait just like the rest of you. So we'll see what it does here. This is an outside edge. This is our IB. This is not a mechanical long. And basically, if you put a trade on here, you have to be willing to take your stop like we all are. And I'm just sitting here right now. There is a bit of a dilemma with this because remember how this works. The market goes up to go down. It goes down to go up. So far, this was the selling side here, right? Goes up to go down. Now we squeeze, goes down to go up, selling. And where did we come? Remember, stops are there. What happened here? Stops are here. We didn't get them. We got more selling. Now we got the squeeze. And if I don't get buying above here, we can come back. Dangerous for breakout traders. Here's something for this astute group of developing traders. Do you guys feel you have to be trading right now? Do you actually, quote, I'm emotional now, feel you need to get in there? Do you feel that it's going to go up? Or what does your plan tell you? The idea of a plan is to be able to throw those feelings out the window. In other words, not operate on your feel and your FOMO, to operate on plan. So what does your plan tell you right here? You see? So the market is accepting this price, but what we don't know is, are we going to continue rotating? But at the moment, we have not rejected this. So at the moment, we're still hanging out. Let me see if I can fix the problem here. that I'm having. One moment, guys. I'm still trying to fix something here, and I'm not doing it. Not letting me do it. Trying to get a different, yeah, okay. I see the problem. All right. Can't fix it right now. Sorry about that. So now we have a couple trades here at TraderLab, none of which I would say are especially qualified unless you already have an edge and you know how to operate. Remember, there's two trades here. One is the IB continuation. That's aligned with the quote trend, but we're in two-sided rotational trading. We are currently accepting this. And so far, what we have done is we've squeezed the short, so it's two-sided trade. I don't necessarily have an edge in this. I mean, I can, let's call it scalp it, but I'm not a scalping type trader. I'm more of a larger rotation trader. So I get kind of patient in this. So this is not my thing at the moment. Our support is going to be around out here, and we can still come back here. Rotational trading. The market's in balance. This is critical if we can take this out or not. I'm really missing a lot of stuff here from. I might be able to fix this. I'm not going to do it. I don't want to take chances here that I make more trouble. I locked up my investor RT by accident here, and I have not been able to get it back. So it's part of when you're in a laptop. In Mexico on a laptop, things happen. So we'll just stay with this. So again, I have no trade. So I want to talk a little bit about trade plan, kind of what's important to understand. What do you do with this? Do you need to be trading all the time? Now, maybe you do, and maybe you have a plan. I make no judgments as far as what other traders do. We all have to do our own thing. And remember, I said time frame. I have a different time frame than you guys. In other words, I do trade, these rotations, but it has to line up for me. So I'm not taking the IB continuation, and I'm not going to take the IBF, which is a mean reversion counter trend trade. So if the higher time frame is up, then the choices are longs, but from where? And no shorts unless you're a counter trend trader. So for me, I don't have any trades. I'm just sitting here. So I don't have a trade. So, and this is out here, right here, an important level, right there. But this is, again, not workable for me. So I don't have anything to do. You guys have questions. I don't have any magic for you today. This is what it is. What is this here? You're new to Bookmap. Executed icebergs are good for entry. No, they're not actually. Icebergs are just limit orders that are executed. They're not sell signals. It doesn't work that way. You can have the market going higher and higher, and you'll see icebergs selling all the way up. Look at this. There's 576 icebergs sold here. Does that mean get short? No, it doesn't. Or there's buying icebergs down here. Does that mean get long? No, it doesn't. Okay. So on its own, an iceberg gives you insight as far as who the participants are, but it is not a signal to do anything. These guys can be selling all the way up. You don't know if they're covering longs You don't know anything about it. So we can't look at it that way, okay? Yeah, right. The thing with RSI is those tools, and they've all been around, and divergence has been around since there's any price-based indicators, pretty much that are moving average derivatives, and that's what RSI is, or stochastics, or MACDs, and all these oscillators, if you will, are all the same. RSI is the same kind of element, and all it is saying is, it's just a derivative. So the market can go up. It doesn't matter. So an RSI is what it's going to do is it can give you an overbought here. And then we look at it like all it does, though, is it gets you short there, it gets you short there, and you're taking stops all the way up. It is like not material to trading, really. It is, it's a tool, but it's not very useful because most developing traders, and I'm speaking about all of us, have used those tools. And why does it work sometimes and not work other times? Because the condition of the market is different, and that tool has some value in certain conditions, and in others it's just going to get you obliterated. So why is it that we have tools that work sometimes and not? And the other part of it is in gaming or gambling. Now, gaming is how casinos play the cards, and gambling is what most retail traders are doing. So the gamblers have winning hands. So we think we just have to do the same thing, maybe do it better. But that's why RSI works at times and it doesn't. Every tool in the trading toolbox works at times, but they're not profitable on their own. There needs to be more. Our nature is to put more of those tools together to curve fit them to create more certainty. In fact, it doesn't work that way. There's more to it. So we have to understand the condition of the market in order to qualify tools and trades. That's what a plan is. This market, for me, is not a good market to trade. So, and I know most of you come to the stream to learn ideas about trading. And I think it's very important to know when it might not be in your interest to trade, more so than looking for the trades. So for me, I've only had shorts, I've had no longs. And now the market is in a location where I don't have to do anything, I can just sit. What is it saying? Possibility to continue higher. Do I want to get long up here? No, I really don't. If it runs away from me and goes up another 20 points, how am I going to feel about it? I'm going to feel FOMO. What am I going to do about it? I'm just going to wait for the next trade that fits my plan. Yeah, and now when you're talking about putting one MNQ on, like the need to trade, well, the fact of the matter is that's just FOMO. Well, I need to do something. Let me put one on just in case. No, not me. I mean, yeah, it's up to you, not me. So I don't have anything to do. Just sit in the Barca lounge or wait for a trade. And this can, right from here, move higher. But I cannot buy it here. I just can't do it. So wait. Or me. I'm only talking about me because I need a couple of pieces. I need a rotation because I've got longs in here and I've got stops under here. If my buyers don't come along, then let's look at how this is working. You can see the rotations, right? So longs up here, right? Sellers in this leg, squeeze the sellers, longs in here, squeeze, blow out the buyers, squeeze the sellers, get more sellers, stops above here. If I don't get buyers here, then I'm going to get these guys. Two-sided trade. So it's a toss-up right here. It really is. So I have nothing to do. I'm inclined to think, and this is a guess because that's all. I mean, it's always a guess. The situation suggests higher. I don't have a trade location. The only thing I have is this for a possible location. And my risk is out to here. So let's look risk reward. If I can't enter here, unless I can enter on the head of a pin, the long would be here. And the risk would be initially out to here. And then it has to come out above here and there to go higher. So long could be there or there against this, right? And it's just shoehorn trading. I call this is shoehorn based trading. How do I get risk neutral in this? Very hard. Okay, so this is very aggressive. Use this. Here's your delta. This is the highest selling right here, and this is absorption because you'll see the buyers. If I come back to the absorption, this, and you'll see the buyers, less buyers, less buyers, sellers, sellers, sellers going down, right? Buyers take control there. This is about as tight as I can get for a long entry. And then I have resistances like right there. So how can I take this long? I can read it, but I can't trade it because of risk reward. I have to get a scale out. The sellers are here. Buyers were there. Sellers were there. Micro trigger, resistance, down, 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 right? Resistance. So the buyers are here. The sellers are here. The high volume is right there. Break low, going to zero. Break high, change. Microstructure is there. This sets up a long to, and you got to get through this thing. It's definitely a shoehorn. So now this can be tradable, but I don't trade it. And the reason for that is I have to lay my risk off. And I know my sellers are here, right there. And you can see them right there. Now the trend is up, but that's my resistance, microstructure. Now I'm only showing you micro here. So when I talk about multiple time frames, or you guys do, I don't use time, I'm looking at this kind of thing. Volume is here. Sellers are here. Now, you don't know until you get the change. Now, the buyers are here. The sellers were there. There's your support. So when you get the trigger, I'm just showing you this out of left field, okay? You could be buying this. Stop goes under there, and then you're doing whatever. Now, what do we have here? Chop, 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 auction. So this chop on this side were the sellers. Break, resistance. You see it? Chop, 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 break, resistance. Flip the other way, break, support. Now let's go up on this side. Chop, 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 break, resistance. Here, let's just throw a little box. I'm just showing you microstructure. And I wish I could show you some other stuff here, but my Investor RT, I pushed the wrong button over here on my laptop, and I froze it. So that's me, not Investor RT, made trouble. So let me show you a couple little. So what are we looking at here? Sellers are here, liquidity. Buyers were there. Break low. The high volume is right there. Think of this like a volume point of control or retail price in the supermarket, mini mart, I should say. Sellers, that's a trigger. This is where the buyers were. That's now resistance. Let's flip it from the other side. Break high, support. Same thing. These are triggers. Support, resistance, back to support. Now, let's just see what it's doing. Resistance. So you can kind of see this, but this is, again, it's not my thing, okay? Because of range, no other reason. I look at risk management as number one. So I'm always going to be looking to see where was my other side. Look where it is. Can you trade in this range? Me? Yeah, with a shoehorn, because my risk, so if I'm entering on this, it's going to be like, let's say here, my stop would have to go under there. So let's look. Let's assume it's 89-ish to where? So 89, so 91 half to what? 93? How do I do that? I don't. What I do is I anticipate the behavior and I look at the range and I go, can I trade this? And the answer for me, not for you, is no, I cannot. So I don't trade it. I just go, well, that's interesting. Now, if it runs away from here, I'm also going to go, well, that was interesting. And the lunatic under the hood, who I call Hyde, Jekyll and Hyde, is going to say, gee, you should have bought it there. Well, no, you should have not, because you cannot lay your risk off here, which is where the sellers were. So I'm looking at this as resistance, and I'm looking at this as support. I know the trend is up, and I know I have the possibility for unlimited upside, okay? But if I can't get risk neutral, I'm not going to take this trade in spite of what might happen, because I have to be conscious of where my sellers are in this liquidity. So we'll watch it together, okay? I hope this makes sense. Again, it might not be what you're looking for in trading, but I kind of look at this as a business, so my approach is a little different. Can you see the behavior? So we'll see what it does. Now, let me explain something else here while we're here. If I understand how the market operates, I can identify support and resistance. I also understand that if I was going to take a long, I need the range to get risk neutral. It doesn't matter what happens after this. And there's a reason, I don't want to say a probability. I'll just say the trend is up. Chances are we're going to go higher. But that doesn't mean I take the trade if I can't get risk neutral. So it doesn't matter to me. I'm not going to be buying this high up here because I can rotate here. And the real issue for me is my entry would be around here because I can't enter on a pin. And my stop would have to be under here, and that's where my obstacle is. So is this a trade you want to take? I'm curious. Post that in YouTube and post in TradeLab. Is this a trade you would take? And you need to answer now. Isn't it an interesting question? In hindsight, you'll go yes or no. But what about when you're right here or when you're right there? Is this a trade you would take? And why? Kind of a thing you need to think about. Because you need to know if this is a trade you would take before it shows up. Not now. Okay, that's a good answer, Greenhorn. So it's a dilemma, isn't it? Because we have unlimited upside potential, theoretically speaking, because we're out of balance and we're at new all-time highs. So, but we are trading in here. So we have to keep that awareness that this can do anything, of course. But what happens now? Because right here, either we're going to find our buyers and we're going to continue up because we already absorbed our sellers, or we're going to stay in two-sided trade. And I'm saying I'm giving you the alternatives because that's all I know. So I can't get long because for me, I have to get risk neutral. I'm spending time on this, not to show you the magic of some guru, which I'm not. I'm just a trader. 46 years of doing this, but the point is, in those 46 years, I've learned patience. And I've learned not to force a trade when it doesn't give me a true opportunity or edge. That's what I've learned. I'm not interested in throwing capital away. I'm interested in taking risk when I have a edge and I have a good opportunity for profit. Right here, this when they say it's a coin toss, I'm not interested in a coin toss. So I don't have a trade. I don't know. I hope you get something out of this and that this resonates with you. That I created Trader Lab because this is really about the business of trading and looking at this as a business. And you have to ask yourself, if you were running a business, not playing a video game, running a business, would you actually take a trade here? Is this a good risk? That's all. Not the outcome of randomness, because it could do anything. But is this a good risk? So I'm just going to say, and saw 90, would that make a long entry more likely? If we got VPOC migration up here, it suggests that we're accepting these prices. We have a ways to go still. There's, if we look down here, there's 13,000 over here. We are accepting above. So, and right now there's 9,000 here and 10,000 there. I would say currently it is accepting these prices and suggesting it's going to go higher. You just have to be able to put this thing on and be willing, of course, to take a stop, and because you're buying near the high of the day. So it's a little rough, but it does suggest higher. And it's not a recommendation. It can still counter rotate. So it's just, I don't see, this is the thing with this. It's not really a debate, if you will, about going higher. The context is up. I don't have an issue with the thought process of going higher. For me, the issue is with risk management and getting risk neutral, because I'm more interested in laying my risk off than any one trade. Just one trade. In a career in trading, tens and tens of thousands of trades, So for me, I don't look at it like I need to do something here, because there's going to be more trades coming. Maybe later today, maybe not, maybe nothing more. I've only had 2 trades for the day. So they were both shorts and profitable for the day. So, but I don't have a long. So I can't, doesn't mean I won't get long. I don't have one. So, because I'm not trending, I am directional, but I'm also rotational. So I'm not, if I'm going to be getting into a trade, this is the last place I can trade, and unfortunately, that's my resistance. That's why this is very, very rough for me. So, because I just don't have range, So the most I could do in this thing would be like a 2 lot, because range. So I have to get one off, and to try to get risk neutral. My stop would have to be right here, using a shoehorn, and I'd be looking for the expansion. And that's an individual plan. If you don't have range from your entry to your resistance, which is there. So the entry would be, let's assume it's around 91.5. This is where you're trying to go, 93. That's not enough meat on the bone to cover the risk. I'd still, even if I took a trade here and scaled one here, I'd still have half my risk on. Is that worth it? I don't know. Does that have an edge? I don't know. But I would not suggest to any developing trader to take this trade. I don't suggest trades anyway, but the fact is, this trade is a long. And then in your plan, does it qualify? It's not complicated. The plan has to have certain trades that are qualified with the condition of the market. You need to know, do you have an edge, and does it meet your requirements for trade management and risk management? Those are like the elements. This has a lot of the pieces. It doesn't have the range. So that's my issue with it, because the range from entry to scale has to fit. And then the number of contracts, at least for me, are adjusted based on the condition and, the quality of the trade. You've probably heard of things called A trades, B, C's, D's, and in an A trade, which happens not very often, you might even have a different sizing element. This is what I consider a D trade or a D minus trade, or maybe even an F trade, because of where it is and the condition of it from a probability point of view. This, to me, even though it qualifies, it's for many of the reasons it's not qualified because of risk management. So it's a D trade or an F trade. So it doesn't qualify, so there's no trade. So make it an F, but with a shoehorn. And if you had an edge in this context, and you would be okay with still having risk on, assuming you got scaled, then it's a D minus trade. So I don't like taking D trades. It doesn't matter to me. If you treat every trade the same, and this is just generally across the board, it doesn't work that way. Now, when you're starting out, you need to just treat them all statistically like they're equal, and then gradually start drilling in to the conditions of the market and other elements, so you can then sort them a little better as far as statistical probabilities, so you know when to size up. Like Friday's first trade, the long, when we came out of the opening swing after filling the ETH all-time high gap, and that was a long, and you could have held that thing through the day, and that's a different trade than something like this. They're not equal. But that is another element of mature trade management and trade plan development. I hope I'm making some sense. I'm focusing on this because if you're trading this, you need to get familiar with FOMO, or have a plan and that says, I'm okay with this, and I'm all right not being concerned about risk management in this range. If it's not in your plan, then you got FOMO, one or the other. James, the iceberg detector, no, this is not the footprint. This is showing the passive orders, the icebergs. These are labeled. This is called market by order data. It's available through Bookmap data and also Rhythmic and a few others. And it shows us the stops. Sell stops coming out, buy stops. This was canceled, so that was an iceberg. This is the resting liquidity. It's showing you where the orders are in the limit order book, and we can see the changes. Everything to the left of the line here is historical, and this is what's happening right now. Okay, so the only trade that's here for me at the moment is a long not qualified. So that's all I can tell you about it. Now, other traders may take a long, that's their business. It's not mine. So they just have to decide. So that's really what I have for you guys today. There's not a lot to this. This is just trading and plans. The idea of Trader Labs, is a community of like-minded traders who come together to leverage their collective experience. We've all done the same stuff. Me, you, we're all the same. The only difference is, again, for me, I started in 1980, so I grew up as technical indicators were coming into the business, and I spent years working with them, reverse engineering them, and then ultimately building trading systems. I was a money manager, so I was, and back then it was position trading, trend following. There was no day trading. If you were going to be, quote, a day trader, you were a scalper, and then you had to get a membership. So I stayed as an off-floor trader, and ended up managing dollars because it was trends. And this is back when we call them commodities. S&Ps only came out in 1982. So I was still new in the business at the time, and they called them pinstripe pork bellies. Because don't forget, commodities were the business then. So I did a lot of currency trading, bonds, that kind of stuff, T-bills back then, Eurodollar, and currency pairs. And the pairs, we didn't have pairs. You would have to lay them, spread them, basically. So Let's see how we do our resistance up here. It is important that you understand the long structure and what this represents. This. So we want to see now what happens up here. Do they pull, or do the buyers consume the sellers up here? And then there. So we'll watch. All right, we're making some new highs now. So the sellers were here. So this is the trigger, and there's your resistance. So that's all I can tell you about it. Now, let's look over here. Let's look at this story. Absorption was here. Trigger. Support is here. Absorption. There's the iceberg. So your long is here. Your long is here. Your resistance is here. So however you can work this. Now let's come back again. Where was our sellers? Here. Where's our support? Here and there. Okay. Let's look at how you might look at this structurally. So you have your resistance here. There you can see it right there. And we have our support here. Let's do a little, you can look to the right. I want to show you structure. And again, this is not a trade I would take. Only because of the range for the risk, not for the structure. So notice what we get here. Absorption. Let's go back over here. Sellers are here, buyers are here. Break high, buyers take control. Come back, sellers are here. Counter rotation. Buyers are here. Absorption, trigger, test, long or not. Again, no long. I'm just giving you the structure. Buyers again. Pull back to where? Here. Absorption. Buyers again. Resistance. Absorption. Absorption. Support is right there. Right. Let me show you where the volume is. This is like a volume point of control. Resistance, support, let me move this back out. So what I do to kind of keep my brain in order and not get too distracted by the noise is I draw these little boxes around sometimes. Oh, wrong box. Here, let me try to grab this. I want you to just see kind of, grab this. See the resistance, support, break high. This now becomes support. Let's see what it does. This is a way you can slice and dice this up. You see it? So, break high, buyers. This is support here, right there. Break high, buyers, resistance. Support is there. Now, here, you don't necessarily have a sense of it until we break high and then test it, which is the long we've been talking about. That doesn't qualify all this time. So resistance, support, break high, potential support. And then there's no target up here. The only thing we got up here is a measured move, which would be this, and it's a strike price at 6,900 even. This would be the area if you were long. That's it. Would I expect to sell off tomorrow? I'm getting a question there. I don't really expect anything. I don't think expectations. Here's what I know. I know the market's long. I know we haven't rebalanced yet. I know that when I say the market is long, that the sellers have not received appropriate abuse. I should say the buyers, and the market goes up to go down, and it will rebalance. Now, I'm not here to say when it'll do that. It could do it today. It could do it tomorrow. But we cannot get carried away with FOMO and that the bull market's whatever it's doing. We also have not put in an excess high, and this kind of behavior leads to excess. So if you get excess on one side, the market has a tendency to rebalance. So in other words, the longs become sellers. That is on the hit parade. Now, the joy of trading is when. Is it going to be later today? Is it going to be tomorrow? Is it not? Is it going to be next month? So it's not. We can't answer the question. What we always have to be aware of is the condition of the market, and that our response of selling this morning was not extreme by any means. We were in two-sided trade, and the market couldn't break down. That just says that there was accumulation, and we were rotational until we started coming out the top. Then it's longs primarily or nothing. Now I say or nothing because I've only had a couple of short trades today, and that's profitable. But the long trades, I could not get on the long trades and meet my plan requirements for risk management. So I found, I only like to think about this like no compulsion. The word compulsion, impulse, compulsion, FOMO. I've learned over paying many dollars over the years that there's other days, other trades. And if I don't get another trade today, I'm all right with that because if I'm always going to put my plan before any emotional need or random behavior. The market will rebalance. And again, we could go up to 6,900 here and no problem, right? But that's only 6 points. So if I'm getting long in this thing, where am I going to lay my risk off? So it just is not a big deal to me. So, compare today to Friday. Friday was an outlier in the sense of the opportunity. We had huge range and terrific profits for those in Trader Lab who have a vetted plan and waited for their trades. This is not Friday. This is a different kind of day. Where's the higher time frame participants? Where's the driving behavior? Or are we just floating here? Seems to me we're just floating at the moment. So it doesn't mean you can't trade it. I think for me, I just want to hang out and wait for other trades. Might not be what you want to do, but I'm going to say this. If you're interested in the business, this is a business of edge, statistical probabilities, Anyway, thanks again, guys, for visiting Trader Lab today. If you're interested in the lab, there's a link in the bottom of YouTube. There's no cost for it. It is about the business of trading. I'm just like you, except I'm doing it 46 years, and I've walked in your shoes. We've all done the same thing. There isn't any developing traders who hasn't walked down the same path. The difference is if you keep waking up in the same place, even though you're working hard and getting the screwdriver out and tuning and tweaking multiple time frames and multiple variable indicators, it may not be your effort, it may be your process. And most of us do not understand this business. We think it's really just tuning and tweaking and that somehow we're going to move the ATM in the basement. I'm going to suggest, no, maybe it isn't. It's really a business of plan. It is gaming. If you understand how casinos operate, they only play games that have an edge and they still play to gamblers, but they do play with an edge. Gamblers do not have the edge, even though they have winning hands. It's really a decision. If you want to build sustainability, you may need to approach this as a statistical business, not a emotional business and an impulsive business. I hope that makes sense. Please give a like if you're visiting in YouTube. Use the link down there in YouTube if you want to visit Trader Lab. You do have to confirm your Discord username. Make sure you're not a spamulator, and I can assure you the Trader Lab might be a different place for you to visit in your journey. Thanks again, guys. Please give a like on the way out. Hope you got something out of this. If you don't have a plan, get one. Over time, That's how you might be able to create sustainability and actually build a career path for yourself in the business. Look forward to seeing you tomorrow. Thanks again. You have to trade what the market offers, and it needs to be in alignment with a statistical edge. If you don't have an edge, then you don't have a trade. Take care, guys. Look forward to seeing you soon.